What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with a MULN, raw price action and statistical threat of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community, ARCab, on Discord. With that said, let's go ahead and dive right in, you guys. Okay, so we are looking at MULN on the 12-hour chart like we have, you guys. It looks like the move that we were talking about yesterday did end up happening. So now there's a couple details that I would like to update you on here, you guys. First of all, yeah, let's look at the daily and look at that first, because it's going to be the easiest side of this. Yesterday we were able to recognize that we had a hammer candle. We had a hammer candle here. This is just some basic candle analysis, you guys, some really raw price action here. And excuse me, I also noticed that we printed the hammer in the, at the bottom of the downtrend, you guys, which is usually a signal of reversal, especially when you're on a higher time frame like the daily, you guys. So now we did print today. The daily candle ended up printing as inverted hammer, also at the bottom of a trend, you guys. This is usually that confirmation candle that we can tend to look for. Now that doesn't mean that the upside is entirely guaranteed. It is a signal in raw price action that we are moving towards the upside. The following candle after a reversal signal is usually the confirmation candle, and this is a bullish candle, you guys. So we are looking pretty good. Now, as you can see right over here, we had this green line, which is the 1.618 resistance that we were looking at, you guys, and we actually used it as resistance, and we have since retraced. So that's important to notice as well, you guys, and it's also important for you to see just how much the trade likes to go to these areas here, you guys. So these can be a strong resistance. They could also be a strong support for us to continue using in the following sessions of the trade. So let's go ahead and dive right back into the 12-hour chart, you guys, and see what we have going on. Okay, a couple more things regarding the candle analysis, you guys. So we did get this closure 12-hour candle below the support of the ascending channel, you guys, which is usually not a good sign, but this is why we were talking about the daily chart, as we had not closed the candle below the support on this side, you guys. So on the 12-hour, we did close this, but we actually reclaimed the channel with it almost looks like an inverted hammer here as well, you guys. But the most important thing is the fact that we printed this 12-hour candle inside and using the support very, very much well, it's using it as expected, you guys. So now the candle printed here is a spinning top doji. That is an indecision candle, you guys. So this indecision is very much in accordance to what's happening with the economic data coming out, you guys. So this is actually the next thing that we're going to be talking about right after this candle analysis. We have CPI coming out on the 10th, I believe, you guys, and we also have the midterms, the presidential announcements, I believe on the 15th, Tuesday. So now I was able to take a quick measurement based on the volatility that we've been looking at for some time now. Now we're going to go ahead and just take a measurement from, let's just say, the firing of the signal, which is usually where I consider to be above the 90 percentile of volatility. This is volatility that we're looking at, you guys, represented by this indicator BBWP. Volatility is direction neutral. In order for us to get a bias in direction, we pair it with something like this down here. This is a momentum oscillator, stochastic momentum. And it's very much like an RSI. So if, I have a success rate of about 75 to 85%, it depends on, it varies within tickers, but it isn't perfect, but it is pretty good for us to consider, you guys. So now, based on every single time we've reached extreme expansion levels, which I consider to be above the 90 percentile, I've taken note of every iteration where we have started the contraction phase towards the downside from these fully expansive levels, and have come up with an average mean for us to be able to consider. So these are statistical metrics, you guys. They're not certainties. So we're looking at 21 total iterations. 12 were guessed correctly to the upside. And now the average upside accuracy is 57.14% with an average upside thrust of 172.12% over the span of about just over 13 and a half days, you guys. So 13 and a half days. We're looking at about 14 days right here. Okay, keep that date in mind. So let's go ahead and open up again the volatility versus momentum profile that we have here, you guys, and take it right at the point where we crossed into the 90 percentile. So this would give us this area right here as for us to measure, right? We're just going to measure a distance right here in days. So from here to right over here is 14 days. Now, the date that I'm looking at, you guys, is right down here. So you can see that it is on the 16th, which is something that I've mentioned to you before. I've mentioned to you that it's possible that we can resolve this upside move after the CPI data and after midterms being on the 15th. So it's very curious. The data is suggesting a large move to the upside, and our signal firing off at this point to the signal ending at this point being very close to where we were thinking. We can actually just make an adjustment like this to the, sorry, hold on just a sec. Let me go ahead and select this. We can just make an adjustment like this and have an implied timing, have implied timing for this, sorry. And there is the potential to where we can resolve this by the 16th, but it's not a certainty, you guys. I'm just giving you some curious thoughts based on the stats that came back in from the back test. So that is a very curious thing, you guys. So for the new listeners, the 172.12% to the upside, if measured from the moment of the firing of the signal, which was right over here, right at this, right around this, these candles right over here, you guys. And actually, we can make an adjustment to that so that we can have it right at the 1.618, because it is, according to this right here, it could be right around these candles. So we can put it from the 1.618 to the top, and you can see that 172% move to the upside is in direct confluence with our resistance of the ascending channel, and also in confluence with our 200-day simple moving average right over here, you guys. So there is a potential to where we can face some a little bit of resistance here where we can sell off and then continue for a bounce. There is also a possibility, you guys, that this can just wick up hard into the 2.618 and then face a big time capitulation to the bottom, you guys. This is an ABCD strategy that's usually looked at by institution and pro traders alike. So if I see it, they can see it, you guys. They can more than likely see it. This is a trend that we're following for a trade. So just make sure, you guys, well, before I continue, you guys, I'm not a financial advisor. Please take whatever I do say within this, within these videos, within this information as a form of entertainment. Please know that I can't actually suggest for you to buy or sell any asset. Take whatever I do say just as a form of entertainment, like I said, you guys. Okay, it's important that we do that. Do your own DD and we'll be fine. And yeah, you guys, so we can look at long positions right over here. And I am also long this stock. I am long at an average of just in the low, I think a high 28 now. I averaged down from, I have multiple entries, you guys. So the first entry was actually triggered at 30 cents right at the 1.618 where we bounced and then bounced again for another 12-hour period. And then we finally sold off to test the support bottom, you guys. So my secondary entry was also at 26.54 based on this 2 fib right over here that we were calling as a potential bottom. We ended up closing, or we ended up solidifying a couple candles right at that level. Let me just go ahead and draw this trend line right here for you so you can see. Yeah, so let's make this larger. And you can see that this candle right here opened right at that 26.54. The reason why you have this long wick downward, you guys, is because it did face some sell pressure, but it ended up recovering. And also the closure, the opening of this candle and the closing of, let's just make sure that it did close at it. So that's 26.60. Yeah, so the opening of this candle and the closure of this candle being right at this line, you guys, is because it's being looked at as the target. So the average of the candle is naturally going to close where people are starting to close their short position and people are starting to open their long position. This is how the candle ends up in places like this. So it's a desired target is what I'm trying to tell you. Also, you can see that this candle used the SMA 10 as a form of resistance alongside the 1 spot 618, which is this green candle, you guys. So we have some confluence and moving targets here as well. Okay, so let's just go ahead and grab a bias in direction, you guys. So let's move on to the next chart and see what we have. So yeah, let's go ahead and just open up a multi-pane right here for RSI in different time frames so we can get a bias in direction for the immediate short-term time frame to the longer term. And let me just move them all like this so that we can all see them. New listeners, this is a regular RSI setup, you guys. The upper half is bullish control zone. The bottom half is the bearish control zone, and the inner workings of either zones is the weakness percentile. Outer zones is the strength percentile of either. Okay, so now you can tell the difference between a signal line, which is the choppier, more rugged line, and the softer line of the RSI is usually the moving average, just so you guys know, okay? So you can see right over here, guys, that this 30-minute, I'm sorry, let's look at the 30-minute first. That's a micro time frame. 15-minute is a little too short for now. So the 30-minute is suggesting a continuation onto the downside, you guys. But as you can see right over here, we went to the downside and entered the bear weakness percentile, but since recovered into the bull weakness percentile. Sorry for the stuttering, you guys. I'm thinking and reading all kinds of stuff. Okay, so what this is telling us is that since we're in the shallow zones of either the bear and of both the bear and bull weakness percentile, we can see some sideways trading at the immediate short term, you guys. And this is very reminiscent of, as to what's happening with the economic data release that's going to come out, you guys. We are going to see some indecision first. Okay, so let's go ahead and move on to the bi-hourly and see what we have. The bi-hourly is also suggesting a slight downside, but it is facing some rejection from the bear strength percentile. It looks like we already tried it. We bounced it. We're trying it again. The moving average is now giving us a hint that it is moving up to the upside, so we could possibly see some immediate short-term downside, followed by us using this moving average as a form of support before continuing onto the upside, similar to what's happening here. And yeah, so let's now look at, well, the 4-hour can also be good to look at. The 4-hour is also within the shallow zones of, I'm sorry, the 4-hour is within the shallow zone of the bear strength percentile, you guys. So it is suggesting a downside pivot, but the pivot, as you can see, is very weak. And also our moving average is also kind of, this is that indecision that I'm talking to you guys. This indecision is very much in accordance to the candle that we printed today. This is an indecision candle, the spinning top doji. Okay, so now let's go up to the 6-hour and see what it got, see what we have, you guys. Okay, so the 6-hour is rejecting off of the bear weakness percentile border, but we are still within that shallow area of the bear strength percentile, you guys. As long as we sit within this shallow area, we can potentially be gravitated towards the bear weakness percentile. However, we have been in this downtrend for a while and trading below the moving average for quite some time now, you guys. But as you can see, we're getting closer and closer to that moving average. So there is a hint at us potentially making a cross and moving a continuation to the upside, possibly in the next session or two. Okay, so now the daily time frame is also curious. We were looking at this and we were basing our downside suggestions entirely, mostly on the daily read, you guys, because this has always been pitched to the downside with a pretty substantial downside pivot. And now that pivot has since changed, and it has since changed in the shallow area of the bear strength percentile. So this is likely to be gravitated towards bear weakness, you guys. Well, just out of curiosity, let's look at the buy daily, since we are, buy daily is actually now using the moving average as a support, and within the shallow areas of the bear strength percentile, you guys. Some more slight indecision. You know, we have slight downside, we have slight sideways, we have indecision here, you guys. So it's gonna be a little bit of a weird run tomorrow, but I am still long the stock. Please make sure to practice risk management. Make sure that you do have your stops in, you guys. Like the stops are there so that we can be able to survive for another day of trading. Okay, we in short-term plays like this, these are swing plays, you guys. We can be in and out of them in a few days, right? So make sure that we have those stops in. And this way we take a minimal loss, but we take a calculated minimal loss. Every single time we can set a max loss of like 4%, 3%, 5%. It's different between every trader, you guys. So if you have a measured loss, then this way you can be able to measure how many losses you have versus always diamond handing a position that's going to the downside or against your favor of direction. So this way you can just see a measured amount of loss rather than a random amount of loss. So it's encouraged within the pro trading world, you guys, to have multiple losses. It is a good thing, actually. They institutions won't even hire you if you don't have proof of loss. So they need to know that you can be able to control your losses. See how I'm getting creative with trading, right, you guys? I see the pattern. I put this together. I see the entry zones. We see the exit zone. The exit zones. You have to be just as creative with your stop losses as well. Similarly, how I told you that at about the I think it was I'm not looking at my portfolio just yet, you guys, but I have a 65% stop loss set at about 24 cents it's at about 24 cents, I believe, if I remember correctly. I have a lot of positions open right now, you guys, that are just automated. So, and also I have a complete liquidation near the 618 of the rest of the percentage, you guys. So you can get creative with your stop losses just as you do for your entries. So I have multiple entries. I go in. So I make sure that I do have an estimate of the bottom, so I can continue a long position to the upside, you guys. So just you got to get creative with the entries, with the stops, and your exits. I'm gonna be exiting like one here, one there, one here. It's not gonna be all just diamond hand to 172, you guys. I'm gonna take profits. I'm gonna make sure to guarantee profits on the way up. This is how it's done, you guys. This is the way pros do it. Trust me. You can actually verify it for yourself. Find a pro, talk to a mentor or something. You'll see that there are different strategies that pros have that do have multiple exits, multiple entries. Usually systematic traders do that type of thing, you guys. Discretionary do too, but I know that systematic guys really do practice this. Okay, you guys, this is a pretty good place for me to leave off the video. If you have any questions, don't hesitate to reach out to me on Twitter, on Discord. I'm going to leave the links in the description below for you to consider joining the ARCa trading community. With that said, I wish you a good night, and I will catch you at the bell mañana. Adios.